as the nation continues and general public. According to the latest data from the Debt Management Office, Nigeria's public debt has risen by a staggering 24 trillion in just 3 months, a significant increase in the country's financial landscape. As a result of this rapid accumulation of debt, experts have raised questions about the sustainability of the government's fiscal policies and potential impact of the country's economic growth. But what are some of these underlying factors? For more insights, I introduced him earlier. He is the Managing Director and Chief Business Officer, Optimus by AfriInvest, Mr. Ayodeji Ebo. Good afternoon. It's good to have you on the program.
Good afternoon, sir. It's great to be here.
Yes, when I saw this again yesterday, 24.53 trillion in 3 months, added to what we had on ground, it seems worrisome. I don't know. Are you thinking that way?
Okay, I think the first thing, yes, so anyone that sees that number, when you look at the growth, yes, will be concerning, because when you look at it in Naira terms, moving from about 97 trillion Naira as at end of December 2023 to about 121 trillion Naira as at end of March. But when you also break it down, when you look at it in dollar terms, it's reduced, which says something. So in dollar terms, it reduced from $108 billion to about $91 billion, which means that its exchange rate impact has to be factored in. So when you look at the exchange rate, in December, it closed at 899 Naira to $1. And as at end of March, it has devalued by about 32% to 1,330 Naira to $1. So you would agree that when you break the numbers down in real terms, the number did not actually, in terms of the debt number, did not actually increase. The devaluation is also an impact. That doesn't mean there was no major increase. So when you take, for instance, domestic debt, when you exclude for domestic debt within that period, the ways and means of about 7.3 trillion Naira was added within that period due to the securitization of that ways and means. So that also impacted on the domestic debt. But by and large, the debt, overall debt level, when you look at it as a proportion of GDP, is still really is really very high. When you look at it as a proportion of the actual revenue of the government, you look at the last 3 months in terms of the budget numbers, it's almost getting almost up to 90%, which says that it's like you are using all your revenue to pay for debt. When you look at debt servicing as a proportion of the total revenue, so that's, when you look at it in that perspective, it's really very concerning. But from the headlines, when you see the increase, yes, it's really very concerning. But it's also good to now look at the details. So in actual fact, in dollar terms, it actually reduced significantly.
That's good, really good to note. And you mentioned the servicing of the ways and means, the CBN, that's about 7.3 trillion Naira, and part finance of the 2024 budget deficit. All of this, I think, were tried to be sorted out for in this. But generally, in your thoughts, do you think that there are other ways to source for funding sometimes? Because when we look at it, yes, it seems like domestic is on the higher side than external borrowing at this time, even in terms of dollars. But is there any other way is there any other way government can go about this?
Okay, thanks. I think there are obviously other ways. And one of the most effective way is the partnership with private sector. But before private sector put down their funds, there are critical issues that needs to be sorted. The first one, insecurity. No one will be comfortable to commit funds when the insecurity level is at this current level. And even if they are committing funds, they would also be very mindful, given the current level of insecurity. Secondly, there's also a need for us to also take care of the bottlenecks. The infrastructural deficit is still very high. You look at the logistics. You spoke about export earlier by the first guest. What are we doing to decongest the ports to ease export? Those are the things that would, so when private sector see that the environment, ease of doing business is very considerable, then they will be able to commit funds. So government will not need to be borrowing significantly to provide some of these services. So you take, say for instance, the road from is it from Oshodi to Jota, for instance, you see that's what's used to through the structural tax credits by Dangote. There are also many major infrastructure that the private sector would be happy to support, to help, and even if they need to be commercialized and make profitable. I know that for most people that are into the transportation business or moving goods around, they will be willing to pay a premium if they know that it will take them less time to move those goods. Why? We don't need government to borrow to fix our rail system. It can be privatized or there be a PPP arrangement. So these are some of the things that will continue to put burden that government will need to borrow to fund. We are not even talking about the personnel costs, but we are talking about the infrastructure that will create the enabling environment and reduce the pressure to borrow. Because when you look at the budget, the capital expenditure is always at the receiving end. You know, when revenue is being challenged, you want to take care of paying your obligations, your debt, look at also personnel costs, and also some of the recurrent expenditure. Those ones, they don't cut them or delay them. They ensure that those are done. So at the end of the day, the capital expenditure that has the potential to create more revenue when you look at it in terms of multiplier effect, in terms of the taxes that you're able to generate when businesses grow, when that is always at the receiving end. So there's a need to focus on that and to look at the bigger picture. And as a result, that will reduce the need to continue to borrow significantly for some of these things. Why government focus more on policies, and once revenue increase significantly, there will be less need to borrow more.
To raise more funds at this time. Many are expecting the likes of customs, FRS to do better in their figures moving forward. But the states are also having their debt put in this. Now that FAC is on the high side, many will think that maybe state governors would reduce borrowing and all of that. How does that also come to you?
Okay, thanks. I like that perspective. And because most times we focus on the federal government.
Yes.
So when you come to states, you would see that when you look at the proportion of productivity or activity that's going on as a proportion of even the FAC allocation or the funds that are being received, you see that it's really very low. So there's a need to even put a structure in terms of transparency, a structure to curtail some of the leakages within that, within the state, such that borrowing would also reduce. Because you are right, if you look at, for some, the percentage is almost over 100% increase, even between 50 and 100% increase. So that means there should be less need to borrow, because if there was no major devaluation, they would have still been able to work things around within the current level of FAC being received, and also even if they have to borrow. So there's a need to check, there's a need to also put control to reduce the leakages that would speak. Because if we fix most of the states, and I like the idea around having, based on regions, if there can be synergy within each region, and that would even reduce pressure even on the federal government. Let there be competition that people will prefer to come and set. If I know that I will, let's say for instance, Ogun State, there's stable power, there's good road, and the security is really very fantastic within that space. People will prefer to move the setup of their factory to that state. So there will be competition that each governor or each state will want to create that enabling environment. But now we don't see that that kind of competition, which I call healthy competition, to create that enabling infrastructure. There should be a real system from Lagos to Ondo State, for instance, because within that channel, to be able to get that, and Ondo State, for instance, is able to create maybe this cheaper land, and they know they can easily bring goods from Ondo State to Lagos at a very within a day, and very, very cheap, and they're able to provide security. That in itself will begin to create employment, will begin to create activity even for that state, for those states that they will not be able to, they will not need to follow. If you look at the East, can they come together within the South, within the Southwest, and see what they can jointly do together in terms of infrastructure? That will really help grow our economy even by state, and as a result, the need to borrow to develop would also reduce.
Finally, before I let you go, let's touch on inflation, which is still on the high side. And the CBN, of course, trying to rein in on these figures. And what we see is hike of rates, which at the moment is not making borrowing attractive, if I'm allowed to use that, because if you look at the figures being presented about 26.25%, and many say lending will be sometimes even above 30%. Well, my question really to you will be, when do you think that we'll start to see inflation taper down? The president in his speech agreed that, yes, these reforms have been taken. There are negative impacts on Nigerians, but they were necessary steps that needed to be taken. How do we put all of this together?
Okay, thanks. So the first thing that we need to also look at is what is causing or driving inflation. Number one factor is food inflation, which speaks to logistics. So I was reading an article, I think about 1 or 2 weeks ago, that to bring in a trailer of basket of tomatoes from the north, each trailer will cost you about 13 million naira to bring it down. And maybe it's about maybe 50 baskets that each of the trailers can take, for instance. When you give that cost, for instance, will be divided across the baskets to sell. So when you look at the cost of bringing it, is almost coming about 50% of the total cost that Lagosians are paying from bringing tomatoes from the north. I'll just give for example, I may not recall the exact numbers, but it's very high. So if we improve on our rail system, for instance, and it takes less time, and the cost of bringing it to Lagos, if we decide that we can't produce in Lagos, then that will bring down the cost of food items. Insecurity is also a major factor that we need to look at. But when we look at the trend, we'll be seeing on a month-on-month basis, it's been slowing down. We think that for this June, will increase because of the festive season. But from June, we should begin to see that also slow down. One, as a result of this factor. Secondly, because of the harvest season will start. But this is not sustainable. The long-term sustainability to bring down inflation is taking care of insecurity, especially in the food-producing areas. That needs to be sorted. Then the logistics of distributing and bringing this food, they need to channel, and that's where the government needs the support of the private sector. But they need to create that environment, that security and environment for them to be able to take on some of these projects. Because if government would want some of these projects, it can take 5 years, it can take 10 years, given the constrained revenue of the government.
A very interesting one. I must thank you so much for your time. Managing Director, Chief Business Officer, Optimus by Afri Investor, Mr. Ayodeji Ebo. Thank you so much, and do have a very beautiful weekend.
Yeah, thanks for having me. Thank you too.
Let's take a break. When we come back, we'll talk markets. If you're